Hey everyone, welcome to Breakout Wednesday for July 26, 2023. It's currently about 5 p.m. on the West Coast, 7 p.m. on the East Coast. First of all, remember, this is no financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, I've missed a bit lately. I'm sorry, guys. I've been away in Asia and just had a lot of shit on my plate. So sorry about that. I'm doing my best to get these out, all right? So here's a chart of the All Lords, and just this, I've been pretty busy lately with trading in the markets. There's a lot to talk about today. I'm going to rush a little bit through it all just so I'm not talking for too long, all right? All Lords has been churning sideways, okay? Broke up, broke down, flushed everyone out, pissed a lot of people off, and now it's broken up, okay? Certainly more bullish now, obviously, than it has been at any point since back here, okay? And so the US markets, though, have been outperforming big time. Most people already know this, but here's just an ETF of the NASDAQ. It's just been going straight up since January, all this year, okay? And I was pretty vocal about how I was getting long and heavy long back here and when it was flushing out in here. And I've still got just as much money in the market as I ever had. Actually, it's more money than I've ever had previously in my life. So I'm still bullish. I should maybe be trimming some stuff that's a bit frothy, and I might be doing soon. I have done a tiny bit of trimming. On Trade Desk, for example, was one that I trimmed a bit. But there's a bit of froth around in the US. Like if you look at let's just look at Netflix, for example. Stuffing that up, there we go. Just huge rallies, all right? And just look at Tesla, because it's the one everyone loves to look at. Just massive rallies, right? From these lows here of 104, rallied up to nearly 300. So there's been some big moves on, and a lot of people still on the sidelines though. And this is how the market works. Everyone was freaking out at the start of this year about this and that, and fretting their little brains off and staying out of the market to be smart and to be prudent and all that bullshit. They've ended up missing out on one of the nicest bull runs since COVID, of course, but probably easier to trade than the COVID one, to be honest with you. This has just been really nice, okay? And so that's enough on that. I'm sure there's a lot of people that missed out on the whole move in the NASDAQ, and so I don't want to rub it in, but it has been good, and I think it pays to be able to trade US stocks, right? Really does, right? So the other thing is, my main idea, the last time I talked, probably 3 weeks ago, I forget, was I thought there was a rotation happening into finance stocks, okay? The main setup was JP Morgan that I talked about. It kind of had this gigantic base and broke out, faked out, broke down, and then bang, okay? So I'm in it, I'm still holding a lot. And I could be completely full of shit with my theories on the whole finance stocks things, but I think the whole Silicon Valley Bank thing was overdone. I think there was a lot of irrational moves going on where stuff was oversold. Really good companies just getting punished for pretty much no reason. I'm just going to try to get the Bank of America up. Obviously there was reason, but not all of the banks were losing clients and having bank runs on them, right? So Bank of America's been breaking out lately, kind of a little bit behind where JP Morgan was, and definitely if you look at like all the big finance stocks, like let's just look at Charles Schwab, nice rally. Let's look at even on the Aussie market, CBA rallying, and just has put a lot of work in down here, okay? And historically, when CBA does churn in below its 200-day and keeps poking up and bashing against it, churns and bases, and then finally breaks up, it's a good sign. And I just think at interest rates now, people were paying 2.5% now. They're paying 5.5%, 6%, 6.5%, 7% even, or even 8.5%, depending on who you're with, what broker you've got, or what bank you're with, or how good you are negotiating, or what how much money you got, and all that sort of stuff, right? What sort of client you are. So, but I just think that the banks have to be cashing in on this, because most people out there that I know can just find a way to pay their damn mortgage, right? Even if they got to work another job, if they got to work 2 more jobs, they're going to find a way to do it. They cut down on buying all the dumb shit that they usually buy, and they save a few pennies. And just think all these little finance stocks, even the more alternative ones, are just going to be, I just can't see how they're not going to be printing monies. The only way they're not going to be printing money is there's a shitload of defaults from all these loans going from, interest only to, P&I, but I just think that's overblown. Now, I remember everyone crapping on about that like 3 or 4 or 5 years ago too, how the housing market was going to collapse due to all that, and it didn't. And I think that a lot of the brokering houses are also going to have more money just sitting around idly in accounts, okay? Because a lot of traders, they put all this money in a trading account and they want to trade actively, but they don't because they're scared, or because they're busy, or because they forget, or because of a bit of everything. And these companies just make free cash because they're just making interest off your cash, right? There's some good brokers around, right? Like interactive brokers that I've been using for like coming up to 20 years now, who pay you interest on your balance. But by far the majority of them will screw you out of everything and try and take it all themselves, right? I'm talking about, the Robin Hoods, and, I could crap on about, pretty much 99% of them will do that. There are a few that pay you interest, and I think that if you're one of those people that has money sitting around idly in your brokerage account, it pays to actually earn some interest on it, right? Especially when you can get whatever you can get now. It's better than 4% or whatever, right? And so now let's just move on. There's a bunch of these trades I'm still in. I'm not going to really spend much time. I'm still in NU from all the way back here. Okay, I'm nearly up double on that. I haven't sold one share. I'm going to keep riding it. I'm just playing with, paper profits now. And by selling this now, I guarantee that, a good result, but I'm going to just go for it and just see if this can just form double again on me, okay? Because then that's when I just think that I have met very few people in my lifetime who have made filthy amounts of money by taking quick profits, but I've met way more people who really do well, who they're usually the people that have the courage to just, I'm not calling myself brave or anything, right, but just have whatever it takes, I don't know the right word, to just sit with winners. Don't be scared of it, of falling and collapsing. Shit happens, man. I'm not going to die if that happens, right? I'm not going to get arrested and shoved in prison or some shit, but if this doubles again, then holy shit, we're talking about some really cool times, and I'll have a stop loss, a trailing stop loss on it. It's going to be a very wide stop loss, and if that can double again, then it's just going to be off to Vegas for me and the family. Then let's just get on. There's others, Apple rallying. I still haven't sold a share, and I'm not going to get stuck on all of these, but it's a little bit frothy. On running just keeps going. But anyway, that's enough on all that shit. Let's just move on. The gear ETF, well done to those who picked up some here. I didn't. I was going to on this day on, when was it, the 10th of July. But there was just this thing in me that thought it might gap down big the next day and I might even get it cheaper. And it didn't. It gapped up. And, when gear is going on a fire sale, you got to make a call and just live with that call, and when it's down below its Bollinger Bands and the shit's hitting the fan and everyone's selling, you got to, step up and just buy the bloody thing. This day I was just getting greedy, I'd picked the bottom nearly on this occasion and, a bunch of the others. But this one I just thought we'd get another gap. We didn't. I would have loved to get more. Anyway, it's rallied back up. How many times has this bloody happened, right? It is such the easiest way. You can trade gear if you want, it's just, I swear if all I ever did was trade gear when it was doing this Bollinger Band stuff and getting sold off, I would have zero losing trades, okay, until I do, I guess, but it's just such a, I just love doing it. Talk about it too much as well. Hey, let's just get rid of this Bollinger Band. I haven't sold any gear. I don't really sell gear. I should trade it, but I don't. I just kind of accumulate it for the long term, WTC, I did screw this one up and I sold half of it way too early back here. I mean, wow, what a trend. I know I stuffed that up. I'm pissed off with myself. That should have been a huge winner for me because it had all the hallmarks of it. Zero, I haven't sold a share, so I kind of done well on that one. And that's that. Okay, let's just move on to some setups and some new stuff. And to be honest, like there isn't, I mean, I've got a lot to talk about in terms of setups, but there isn't a whole lot, because right now I'm making all my money by sitting on my ass, okay? I've got positions in all these American stocks which are doing great. I've still got a position in MMS. Like, it's just, for me, the best thing right now is to do nothing. It's just to concentrate on other areas of my life, keep looking at the market, learning and just looking at setups and researching companies. But in terms of being active right now, I don't think it's in my best interest to be active. I think it's in my best interest to just sit on my ass and try not to sell, unless I get legit signals to sell, and just let these trends play out, because, this is how money's made, right? Riding major trends. And so, but having said that, 360 is setting up here. Okay, it obviously has blue sky above it, other than obviously the 21 highs, I just want that to base a bit longer. It just needs to dry up. I just want some days where the price hardly does a thing, and it hardly any volume and hardly any movement. The weekly chart, that's not really a base to write home about on a weekly chart. And when I'm kind of got paper profits and I'm feeling pretty chumped with myself and happy, then that's usually when the market's just waiting to just spank me. So for me to take new setups, it really needs to fit on a weekly chart. And I think it's a good screener. It's a really, really good screening tool. Just flick to a weekly chart. Is that a kick-ass setup on a weekly as well as a daily, or does it just look good on a daily? And so that just needs a little bit longer. AEF, okay, I was hoping this wasn't going to break. And it's just this ethical investment, managed fund that used to be a market darling, okay, back here, but I was up at 14, 15 bucks or whatever. And then it just started this gigantic downtrend, and then there's just signs of bottoming action. It's still below its 200-day. I still think it can churn, but it was in a Davis box that came up on it, Davis scan, and that was a high of the box, and just had this flush out here below this low. It's just got classical bottoming signs like a lot of the tech stocks that I was talking about 6 months ago were having, okay? Like Zero was having, like all that shit that I was talking about. And so I just think this is broken, unfortunately, but I'm going to watch that churn away. I'm not in it. If it can churn away and give me another setup soon, then I'll probably dive into that. And then I'm watching a lot of these kind of tiddlers just to see if I get a nice opportunity. A lot of these little lithium stocks in the ASX that are risky as shit but can really double or triple quite quickly. And DLI is one of them. I just want that to tighten. WA1, it's just probably one of the most talked about stocks on Twitter. It broke out today. I'm not in it. I want that to tighten more, but some of these guys are having amazing moves, so I'm keeping my eye on those guys. And there's a stock on the NISI TransDigm. This is the most amazing company if you care about doing fundamental research, and this stock is amazing. Forming a really tight base here at all-time highs. Watching that one, I've traded that a bunch of times over the years. I'd love that to be longer, but I think it's nearly good enough for me. And there's a few others. Google, I'm looking to get more, but I think I've already shown that chart. There's an interesting chart on WGN, okay, and I don't quite know what to make of this other than, that's nutty resistance here, okay. I bring this up because it's interesting. I don't think I can trade it because I just don't know if I'm going to get a decent fill on it. I just think it'd be just a bit of a waste of time. But for really tiny accounts, I think you can get a nice fill maybe and go for it. Like there's a lot of resistance like here. And so, part of me thinks, shit. But then we also have, this massive flush below this low. And then we're sitting right on top of that flush, so it's like, we failed, then we've based and we're sitting on top of it, and it's maybe forming a launch pad. So I think it's a very interesting chart, and I'm going to leave it alone and personally, but I just thought it'd be fun to bring it up and just point it out. NXT, okay, this is just one of these really good companies that it's a bit of a loose base up there, which I don't really like. It needs to be way tighter, but I just think in this stage, if we are in a new bull market of tech stocks, which obviously we are, but just look at the last tech boom. They tend not to last 6 months, right? They, will test their 50-day moving average a lot, but they can last for 2-3 years. And so I'm having an open mind, and I'm looking for that to tighten up because it's got good fundamentals behind it. And then it's the wrong one typed in. I'm looking at just some emerging market stuff. So there's a lot of emerging market ETFs and indices, if you do your own research, that have been based in. Okay, here's just a good example that I've been looking at. It's just the Vanguard one, and it's just been based in here for a long time. And let's flick to weekly. Bang, huge base, and it's just it's not the only chart. I could show you about a dozen or so emerging market charts that look very, very similar, and so I think it's pretty interesting. And it's a big wide world out there outside the ASX. Okay, and the only other thing I've talked about so much, but there's a lot going on in my head, and I haven't talked in a few weeks, is this MELI on the NASDAQ is South American. They have business in South America. Okay, South America is Amazon, and so wonderful company, growing very, very quickly, amazing business. Hands down, one of these stocks that I want to own in my long-term account. I kind of missed these moves, and it pissed me off, and I meant to get it when it was coming out of this consolidation. I stuffed it up, and I think I'm getting another chance. Okay, it's flushed down to its 200-day. All its earnings reports are good. It's fundamentally good, and I just think maybe it's setting me up here, and I'm gonna jump in on that soon. There is a stock that I really love, and I did mean to talk about it a few weeks ago. CHTR, boring company. I mean, it's in the cable business, which is boring, but beneath the hood, it has an amazing business. Okay, and there was a podcast I listened to that brought it to my attention. Actually, the charts brought it to my attention. I think it was an Equity Mates podcast that I was listening to. The charts had already kind of brought this up for me, and I was looking at it, just basing away in this base, and then I listened to the podcast, and it made me kind of dive into its business. Just huge downtrend here, okay, just been absolutely obliterated from 830, down here to 302 or whatever, and then forming this huge classic bottom in base, okay. And here, obviously the entry here was here at 354, it's one I'm watching. I did mean to bring out an episode back here, but shit, life got in the way and I missed it. But, I still think it could be early days for CHTR. And I am in it, but if it's just a starter position, which I'm pretty happy about, and if I can get a nice pullback to some of these key moving average levels, then I'm going to get my full size on, okay? And so that's really what I'm going through my head at the moment. I want more MELI, CHTR. I want some MELI because I don't have any CHTR, and I'd love some more Google. Other than that, I could talk all day, about, the travel stocks that are flying, Uber, setting up here at all-time high, not all-time highs, but at new highs. And Uber's just dominating Lyft, aren't they? And they're bringing out all this cool shit like Uber for old people. I use Uber Eats every day, pretty much, when, I'm just sitting here doing work and I just get Uber Eats. It's just so good. Someone just rocks up and brings me yummy food, and I pay like $5 for delivery. Holy shit, what a world, Why would I ever go to the shops ever again, It's just, for me to get in the car and drive to the shops to get some food, it's going to take 45 minutes, 30 minutes of my day. I know, shit, I can be working during that time and have someone deliver me something for $5. It's an amazing company. It's had a huge move. I just think Uber are going to be winners for a long time. And I watch the stock every week for an entry, okay? I've completely buggered up my entry back here. I was planning on it. I missed it. It's a bit like MELI. I will be owning Uber. I just need to pick my time, okay? I could keep talking, but there's 20 minutes. I'm going to piss off. I'll try and get back next week. I hope everyone's well. Cheers, bye.